pleasure to have you in, Mr. Muktar.
Thank you, Joanna. My pleasure to be on your program.
Of course, right. So, I mean, is the pressure that much? Where do the banks stand now in the race with this recapitalization that would warrant the CBN saying, don't use illicit funds to fund this recapitalization?
The president is just sounding a lot of warning. I don't think the pressure is much. Yeah, when you look at that, the first-tier banks, most of them, Zenith have concluded their recapitalization. Access has concluded their recapitalization, and so we are just waiting for GTCO have done the first tranche of their recapitalization. UB have done the first tranche of their recapitalization. First Bank, First Holdings is about doing their own right issue for recapitalization. Also, FCMB Group also have done their first tranche of recapitalization. Wema Bank have done their own of recapitalization. Fidelity Bank has finished their own recapitalization plan and even planning to get above that CBN threshold. They're trying to do what we call prefer investors investment there. So when you look at that, and I think a lot of banks have concluded, like I said, GTCO also about to do their second set of recapitalization, and this time their target is on foreign investors outside the shore of this country, and that will also help drive in liquidity of FX into the economy. So I think the CBN is just sounding a note of warning so that if you have any, for those banks that have not recapitalized, they should be aware. But I think it looks good for the bank. I don't think it's adding any pressure to them.
All right, so not much pressure. Some of them may have the luxury of time. The deadline, of course, is next year, less than a year away, actually. But is there anything the CBN is doing right now to address it, right? To address the risk of banks raising capital from illicit sources? Are there any measures in place from the CBN?
Yeah, I think there is, even if they will not categorically tell you what those measures are. If you look at the recent right issues and also the public offer from both Zenith, especially this public offer from Zenith and also GTCO, you realize that maybe with Fidelity, you realize that some investors' shares were not allotted to them. This was due to CBN felt that they were disqualified from getting those funds if you don't provide the required documentation. So I think that is there because CBN also vet all these processes. I don't think they don't have the modality in place to check up for this. I think what they are doing is to warn the bank so that you don't get caught up in so much of these issues that might be disqualified, and then you put your recapitalization at a risk. But I think they have all the modality.
Well, hopefully they take heed and they take the warning. But we know that there's a lot going on in the economy right now. The banks may have benefited, especially judging from the FY 2024 results from high interest rate environments. But right now, there are a lot more global and domestic economic headwinds. How do you see this impacting the banks?
Well, unfortunately, I think it will impact the Nigerian economy more than the bank. It could also create more opportunity for the banks to bring in more funds in terms of investment fund and getting fund for long-term project. Because again, the kind of return you get in Nigeria is different from what you get outside the shore of this country. So definitely create opportunity for the banks, but I think the challenge will be with our own government managing that headwind, especially with our benchmark of oil at $75 per barrel and now selling at about $60 per barrel. So with the bank, I think because of their also expansion drive, which has also helped them, they are not just depending on the headwind that will happen in Nigeria. Most of Nigerian banks have expanded beyond the shore of this country, so taking opportunities. You have Nigerian bank in Benin Republic, you have Nigerian bank in Tanzania, Kenya, South Africa, and also they have them in the major economic cities of the world. And some of them have even gone as far as Beijing in China. So they have spread their risk, so definitely they will have minimal impact. It's not that they won't be there, but they will have minimal. And that is why this recapitalization itself is good, because it will help against such global shock. Because when you have more capital, your capital adequacy ratio is very high. As it stands now, almost all Nigerian bank capital adequacy ratio is very, very high. So I think there might be effect, but it will not be so telling. in the banks. And like you said, if you look at their 2024 balance sheet for those that are released, the results by the tier one bank, you realize they are highly liquid and also looking forward to take more opportunity both in the local and global economy, especially in their expansion drive over Africa.
Right. So, I mean, from what you're saying, there's a lot more opportunity than impact on the banks. But, I mean, the purpose of this recapitalization exercise, you know, as stated, is to help boost the economy, contribute in one way. The banks should be contributing one way to the goal of reaching a $1 trillion economy. So what is their role? If they're just benefiting and getting opportunity, what is their role, their real role in creating that or helping to create that $1 trillion economy? Are they playing their part?
Well, Joanna, any economic prosperity starts from your financial sector. Any economy risks also start from your financial sector. So when your financial sector is very strong, definitely that means you'll be able to take advantage of opportunity, especially like the Nigerian economy. What we see by the recapitalization of this bank, it's not that this bank were not really recapitalized in terms of, if you look at most of them, even the 500 billion that they're expecting them, most of them, their earning per share, their retained earnings more than 500 billion. But the CBN wanted a fresh investment into this bank worth that amount. So definitely, that's why I think that the bank are very strong. Now, the whole reason for doing that is that if you want to open up your economy, like what the CBN or the current administration said, they want to make Nigeria a $1 trillion economy. You don't want outsiders, other foreign banks, to be taking care of high-ticketing deals. You want your local bank to be the sole sponsors of those deals so that the money remains within the space. And when you have foreign investors, they are not easily taking up investment from outside the shore of this country. You can imagine if the building of Dangote refinery was largely sponsored by Nigerian banks. You know what that would do to their FX earning today in terms of repayment of those debts. And what also that will do to their balance sheet. So those are the type of projects that the government think a $1 trillion economy will bring for them so that they can take advantage. Now, if you look at some of these high-ticketing deals, like the Dangote refinery I just mentioned, and others that want to build major refinery, they are looking at going outside of the country because the Nigerian banks are not highly capitalized or highly liquid to take such long chunk of the. But now, by this recapitalization, we can get banks that could come together, not just coming together with the foreign bank, but with the local bank to sponsor a high-ticketing deal. And that will be good for the Nigerian economy. But when you talk about why, you have to ask ourselves, why did we get to the point that the bank have to recapitalize? You realize because of the government wants to have a $1 trillion economy. In having a $1 trillion economy, also the bank will play their role. And also the federal government has to play their role in terms of fiscal discipline and monetary policies. And so that is where the challenge will definitely lie. It's not that the banks will not recapitalize. That's the first step. The second step is, do we have the physical discipline or monetary skills to maintain a $1 trillion economy? Because if you want a $1 trillion economy, you have to make sure that your GDP growth is hovering between 10% for the next 10 years if you're looking at 2030. So if you look at that with what we are doing now, then it's a far cry. So there's a lot of work to be done. But the financial sector are really the key driver of those works because they are mostly the service sector. Right.
Everyone has a role to play from what you're saying. But I'm sure you've been tracing and following this recapitalization exercise for over a year now. When you compare it to that of 2004, what would you say stand out as the differences between the recapitalization exercise then and what we're seeing happen now?
I think the difference is in terms of time. They're given a longer time, 24 months, compared to what we have in 2004. And I think in 2004, we had a lot of banks go under because of lack of time, because at that time, that was the first time Nigeria was going through such a recapitalization. The merger and acquisition was not well handled, so a lot of banks fell out. But this time around, I think most banks know what to do. They have the experience of 2004. So merger and acquisition, if it will happen, it will be sleepless because we've seen a lot of that happen before now. In 2004, the banks were not highly liquid like what they are today. So definitely there's a lot of difference in that. In 2004, the bank did not attract the kind of foreign investment that they are going to attract now. And in 2004, most people were concentrating on the bigger banks at that time, but you can see a lot of activities also in the second tier bank and even in the merchant bank and even in the non-interest bank. So there's a lot of difference. And this difference can be attributed to the kind of confidence that a lot of people have in the Nigerian economy compared to 2004. And again, the other bigger picture is that a lot of people will not look, especially investors, will not look at the kind of growth that have been achieved by these banks from 2004 to where they are today. So definitely that is what is still making the difference now. So there's not so much pressure. We will not see the kind of recapitalization that we had in 2004, where some banks were not able to meet up and a lot of customers lost out and their funds were trapped. This time, I don't think we will have any room for that because the CBN has actually given them a long time. And also, it's a category. If you want the foreign license, if you want the regional license, if you want the state license, if you want the merchant license, they are different compared to that time in 2004, which was a holistic 25 billion or not having banking license. So those are majorly some of the difference that I can see.
Yeah, I mean, it sounds better thought out, but exciting times for the sector. Thank you so much for the breakdown, Muktar Mohammed, CEO, Finance with Muktar. Great having you on.